You're on the Franklin Trade channel. In this video, we will cover candlestick analysis. Candlesticks are quite an important tool for trading because our chart consists of candlesticks you see. We have a very good trend, and the price is indeed gradually starting to reverse. Therefore, we switch to the broker and open a short position on the euro-pound almost immediately. I expected the price to go up a little, but it's no big deal. Let's mark the important price levels together. We will need them for further market analysis. Nevertheless, we should talk about candlesticks right away. Candlesticks are what we constantly see on the chart. Candlesticks are divided into two types, rising and falling. They are called both bullish and bearish. For example, this candlestick here seems to be bullish, but it looks like indecision. And that's why we have already opened a short position, because the combination of these candlesticks tells us that the movement is gradually coming to an end. Many novice traders always Google what candlestick patterns are, such as the ones we have on the screen right now. We need to note that all these candlestick patterns work very well on higher time frames, such as 5, 10, 15 minutes, or even hourly. On a 1-minute time frame, these candlestick patterns work very poorly, and this is important to know. However, they do work, and for the most part, they work in the sense that when we have some candlestick patterns, the market can often reverse. Most often, these are long shadows. Long shadows indicate that the strength of the bulls or bears is already ending. For example, in this area, we had a market reversal, and here we can see indecision candlesticks, a small upward spike, and then a sharp correction downward. This happens quite often. If you look here, the same story happened, or here, if we mark the level, we can see that there were no candlestick patterns, but we can notice that the price still fell afterward. As for a euro-pound, it is gradually moving sideways, and a reversal is not yet in sight. Therefore, we are closely monitoring and will consider our next steps. If the price breaks through the resistance level from above, it will continue to move upward. If we drop down to the support level, the movement will indeed be downward, and our pattern will actually play out. Let's see what happened. Our position closed in profit, but the price is still moving significantly upward. And if we look at this entire combination, we can clearly see that the price is in a sideways movement. This is a sure sign that the bulls and bears are equally matched. And here, I think it's worth opening another short position, simply because the market is gradually losing steam and not reaching new highs. But the price cannot just reverse on its own. It is worth looking at this area and marking it with a level of a different color. And then look at the history. In the history, it is clear that the price has already reversed several times here. And this reversal was not without reason. Moreover, there were quite good reversal patterns here earlier. And this tells us that there is indeed some level here. It might be a mirror level, or it could simply be an area of interest for buyers or sellers. Let's look at the 5-minute chart. And on the 5-minute chart, we see that our current range is one continuous indecision candlestick. If you study price action, it is stated in price action that trading in such situations is not advisable. But if you study the chart and try to work through every situation based on the picture, you won't be able to make a profit. Because you need to trade not candlestick patterns, but the price and trading situations. Because we can have a huge number of trading situations here. And candlestick patterns are suitable for just about every trading situation. If you look at the chart a bit more closely, you can always see some kind of candlestick pattern. For example, I see a good combination trend continuation on 1-minute time frame. We have already noted it a bit, but here it is. This is a typical bullish engulfing pattern. And this trading situation appears every time, and it works out many times. But it works best on a good and active trend, like here. And this is confirmed by the fact that the price continued to go up. But if you trade this situation every time just because such a candlestick pattern appears, you won't make much money, because sooner or later the market can reverse with a completely different combination. Single candle combinations, single candle patterns, and reversal patterns are very often executed. They work on the 1-minute time frame, the 5-minute time frame, and the hourly time frame. But it is best to use higher time frames for candlestick analysis. On the 1-minute time frame, we trade local situations that require immediate actions and instant decisions. As we can see, the price has broken through our level and is moving further up. And this signals to us that the market is indeed rising, and a small consolidation before a good upward movement can always occur. Therefore, I won't say that candlestick patterns always work. You need to use market logic and nothing else, because only this way you will be able to make a profit. If you want more detailed training, you can always message me privately, and we can talk about trading. Also, don't forget about my Telegram channel, where we trade and make really good money. And don't forget to like this video and leave comments. It makes me very happy. YouTube sees it and pushes my videos further. So, what do we have here? It turns out that after we opened a long position, the market traded a bit, and the price is slowly but surely moving further up. And this is a good sign of a strong bullish market on which we have made good profits. Friends, thank you for watching my video. I hope candlesticks have become clearer to you than before. Good luck with your trading. Bye bye.